All right. Good morning, everybody. This is Anna from FinancialCoach.money. And today I just wanted to talk about when it comes down to reviewing historical assets by data, right? I want everybody to know what assets that gives better of a return. And I actually included crypto for this one as well. Now, let's get started. This is the annualized returns by decades. And now, as we can see, the annualized return is being broken down by decade, right? So the stock market has predominantly always dominated, but except for 1930s and the 2000s, and I'll touch on base on why that happened. Bonds have shined through the crisis and actually, during full rate periods. Gold has predominantly been flat for decades, but it does surge um, during inflationary shocks. So we have to be mindful about that. In crypto, it's like the new kid on the block, right? It's new, but it does show extreme volatility, which is also very, very helpful. Now, what happened during the 1930s and the 2000s? Well, as we can see, the crash was nearly 90% during the 1929 to 1932. And that really did crush the market a lot. The bank failures and the unemployment rate was 25%. Pretty much everything just went down during that decade. So even after a rebound, the stock market ended I want to say roughly flat for that decade. During the 2000, we saw the dot-com and the financial crisis, the tech bubble burst in 2000, all the way to 2002. It pretty much cut the Nasdaq by 80%, which that was astronomical. Now, during the 2008, we know that the housing and the banking collapsed, and those two crashes alone gave about a 50% decline. So that was a really, really big blow for the stock market during those 2 decades. So now you know what happened during the 1930s and during the 2000s that caused the stock market pretty much not to produce. So we need to remind ourselves that even the best performing asset like the stock market can stag or can sometimes have a negative return. Remember, not everything is it's always going on an upscale. This is why also diversification is important. We need to look at real estate. We also need to look at gold, right? We have to protect our asset. Staying invested is the critical component, right? Because think about it, if those people that exit during the 1930s or during the 2000s, they missed out on a lot of money because the stock market recovered and it always recovers higher. This is just a visual chart of, the historical returns. And as you can see, the new kid in the block being crypto, it is causing some serious damage, right? Stocks are consistently strong for long term, even though it has some volatile moments, but it does stay consistent through the long term. Bonds, like I said, they offer safety, but very, very low return. And we need to keep in mind that right now the bond market is slowly dying. Gold, like I said, it's gold is gold and it's going to spike during inflation or during uncertainty. And I want you to do something for fun and analyze the price of gold versus the analyze of crypto right now. And you can see that they are identical. Crypto is explosive. Look at that. It's just massive when it comes down to it. It's very explosive, but again, it's very risky. But sometimes you want to make money, you gotta risk something. All right. Now, look, it was nearly in 1 decade, it was up by 200%. That is astronomical. All right. So, what is the main lesson for here? The main lesson is that the stock market, it dominates, right? We're here for the long term. We're here to grow wealth. Despite no matter what happens during a decade or two, we're here for the long game. Bonds, like I said, they shine during inflation rates. But I wouldn't put any money in bonds right now if you ask me. Gold serves like an insurance policy against inflation and currency shocks. But like I said, make sure that you are looking into that because I find that very interesting. Real estate, I always say that you have to own some sort of real estate because it does play a huge role. So real estate is stay pretty much consistent and it does, compound eventually over time. But, is it the main drive? No. As we can see, it has been the stock market and the new kid in the block, which is crypto. So crypto gives you that explosive growth that we need, but it does come with extreme volatility. So you have to have the stomach for it. Make sure that you are diversifying. Make sure that you balance safety with growth. All right. And remember, we're here to invest for the long run.